Hello and welcome to this Thursday's morning market briefing. We've got lots to talk about, but firstly, Xi Jinping tells the US CEOs that China's growth prospects remain bright and high. As well as that, newest ECB board member says it can cut rates swiftly despite rising wages. We've got lots to talk about on the charts. Also, with lots happening on the economic calendar, but we'll come to that near the end, so make sure you stay around so you can see that. Before we get straight into it, though, make sure to subscribe. The first article to talk about is on the topic of China once again. Now, Xi Jinping has now told the top US CEOs that China's growth prospects remain high. This comes in a new effort by Xi to revive investor confidence in the Chinese economy. Now, this is most certainly not the first time we've spoken about the Chinese economy, nor is it the first time that we've spoken about US-Chinese business relations. Obviously, the way we've kind of been talking about US-Chinese relations recently is one which has been, kind of highlighting the large issues between those two trade partners, with the geopolitical issues around topics such as Taiwan, as well as issues over the Chinese spy balloon. I believe last year or the year before, last year, did spark a great deal of kind of hesitancy from the Biden administration in kind of continuing to work with China. And as we do know, the US and Chinese relations are kind of at their all-time low at the moment, especially going back, the past decade or two. So most certainly, relations between the two significant powers of the world are at their all-time low, and ultimately this is creating a great deal of worries for the US CEOs, the companies and the executives running those companies, which kind of take care of the US population and the world's economy, as ultimately we've spoken before about CEOs such as Tim Cook, the kind of CEO of Apple, who has started to diversify, his supply chains and move away areas of production for iPhones and other kind of Apple Apple products away from China and to other areas within Southeast Asia and Asia as a whole, as this is ultimately driven by the growing worries to do with not only China's economy but also China's political leadership. We know that for these companies that have a great deal of kind of bases in China, these US companies which have large manufacturing bases within China itself, are dealing with a great deal of issues in regards to the kind of political leadership, as ultimately there's kind of a great deal of worries over the stability within the nation itself, but also the way that the government may interact with those businesses, with those warehouses, and kind of force maybe the companies to do things a certain way, or just the kind of lack of stability in regards to do we have fair choice over whether our business is able to exist in this area, and that kind of thing, should the US and Chinese relations worsen any way. Because ultimately, as we saw with Taiwan's recent elections, where of course the more progressive party, the more anti-CCP party did win, that created a kind of ripple effect across China and across the US, with these CEOs kind of worrying further whether this was going to affect their relationship with China in any way, because ultimately the US was starting to kind of intervene almost with Taiwan to a greater extent, sending their old kind of officials, ex officials and that kind of thing to Taiwan on a delegation to kind of help Taiwan with certain things. And the kind of worry was ultimately that if the US does continue this way, if China keeps posturing towards the possibility of invading Taiwan, what does this mean for business? Ultimately, if China does invade Taiwan, if the US does get involved, and the economy within China itself also continues to slow down. There's just too many risks involved for these CEOs to keep such large bases of manufacturing within China itself, and that's why we did start to see, nations like Vietnam really kind of enter the new kind of realm within the manufacturing space, because ultimately it was just a new base for all these CEOs to start setting up their key manufacturing hubs. So I think that's something that's very important to note, and I think that's what Xi Jinping here is trying to once again repair. We know that last November we of course had the San Francisco conference where the US did welcome Xi Jinping for a kind of business conference and that kind of thing, and there he did meet some of those US CEOs I just mentioned, but ultimately, how much can one meeting really do to kind of once again revive those investors' confidence within China as a nation of economic growth. And with the current property crisis, of course, within China, I think it is very hard for these outside investors to try and conjure up an image in which it makes sense to kind of keep pushing their entire manufacturing base or entire kind of software base into China itself. So it's a very interesting time indeed for China and the US and their trade relations, and also the US companies that are involved with China as well. Now, Xi met around 20 US business figures, including Chubb's Evan Greenberg, and Blackstone's Stephen Schwarzman, where he made clear China was focused on reform. This all comes at a time where the key trading partners of China are worried greatly about China's large recent investments in manufacturing, which was done recently in order to overcome a property crisis, and as a result is creating an oversupply and risking dumping in international markets. China's growth target was set at 5% this year, which is the same as last but closest in decades, but the lowest in decades, and even then analysts believe that it will be hard to achieve without resurgence in domestic demand. Bloomberg's chair and FedEx's CEO were in Beijing this week for China's Development Forum. The last time Xi had interacted with these US CEOs was back in November of last year during a dinner organized in the US by the National Committee on US-China Relations. The European CEOs present in Beijing at the time of the CDF were not invited to this meeting due to the fact that meeting was a response to the San Francisco event. So I think that's an important comment to make there, is it does seem like this was an effort also by Xi Jinping to kind of amend those trade relations as well. That said, the tensions are still high, and the US has pledged to investigate whether imported Chinese electric vehicles constitute a security threat. So certainly there's still large issues between those two nations trade-wise. I mean, just think, the Congress is currently investigating whether, TikTok is a national security hazard and thinking about banning it. We've also got, Biden recently has imposed a great deal of kind of blocks, on certain exports to China. We know that there's also certain limits on what can be imported from China, and where the thing is kind of produced within China makes a big difference into whether it can be sold on the US market. And now, of course, we're talking about the US pledging to investigate whether Chinese electric vehicles constitute a security threat. So a very important article to note here, and a very interesting time indeed. Next article to talk about is to do with the ECB, and on a topic that I think we cover far more, which is interest rates, of course. Now, the ECB's latest board member has now warned of waiting too long before cutting rates. This comes as Piero Cipollone, in his first speech, said Eurozone wage growth seemed to have peaked, and if it kept slowing in line with forecasts, rates were ready to be cut. Now, I think this is an interesting article to know, ultimately because the ECB has been that kind of central bank, which has ultimately been pressured more than maybe the Bank of England or more than maybe the Fed to in fact cut interest rates. And this is largely driven, of course, by the fact that we are seeing lower levels of growth across certain nations within the Eurozone, which is creating a great deal of pressure on the ECB to kind of start cutting rates. And this is largely why we never saw interest rates within the within the Eurozone rise to the same levels that we've seen in Britain or the USA. And so I think this is always so important to note. And added to that, we've seen a great deal of political pressure for the ECB to start cutting rates earlier. We know that those like Giorgio Meloni, the Italian Prime Minister, I believe it could be President, but Italian leader, ultimately pressuring the ECB to start cutting interest rates as a result of the kind of effects that it was having on the populations of Italy. So the ECB has certainly had a tough time in regards to interest rates and inflation, and ultimately the ECB is seeing the lowest levels of inflation in comparison to many other central banks and what they're seeing with their respective country. So I think that's also definitely influencing the way the ECB has been thinking about interest rates. But as we know with President Lagarde, she's repeatedly said that they're very much kind of hesitant to make any changes, very hesitant to cut rates early, because ultimately they want to see that data, they want to see that inflation's coming down to the target levels, and say they do make a single rate cut, they're not going to just continue this rate cutting cycle despite what the data may say. So that's a kind of key thing to note in regards to the ECB and this new board member, as this new ECB board member does seem to be one that's far more dovish, so that could definitely be something that's influencing the way the ECB makes their rate cut decision in April, of course. Now, these comments indicated his preparation to argue for rate cuts in the April meeting. This, of course, still would depend on if the data for inflation and wages meets forecasts, with his key warning centering around the fact that if wages slow too quickly, workers would be left with permanently lower purchasing power and push down growth. The speech ultimately left most seeing Cipollone as the very dovish ECB member, with his comments also contrasting with the statements made by several colleagues of his who instead do not support the cut of rates until they see data showing that wages have in fact slowed. Cipollone also said that the pace of any rate cuts should be matched with the speed in which inflation was falling towards its target, and therefore if inflation started falling faster than expected, the ECB could opt for a faster rate cutting pace. So very interesting change in rhetoric from the ECB and a very interesting new board member. So definitely keep your eyes on the ECB and this new board member. That's all to talk about in the articles, though. Next to talk about, of course, is the charts where lots is happening. And as you can see here, of course, we are starting on the US 30, the Dow Jones, to talk about US equities as a whole, where we have now seen price within the last day or two start to move away from this key liquidity zone, which we did note in a few at the start of the week even. We had noted this area as the key level, which we were expecting price to maybe retrace down to and then continue to the upside, as we had noted that ultimately price was in a very overbought territory when we ended off last week on Friday. And we started to see that sell-off take place, and so as we entered the Monday this week, we had noted how we were expecting price to retrace down to a convenient level before enough bullish liquidity was found to start the move to the upside once again. And when price did first come into contact with that 38.20, we did note how it was unlikely that price was going to move away from this area, simply because there was such a an ideal level just below it, that being the 50% Fibonacci retracement level, and that key liquidity zone just below it, which had previously acted as an all-time high for price. So ultimately that was the area that we were expecting price to gravitate to and then move away from. And since then it does seem like price has found that liquidity and now is carrying that momentum to the upside and moving quite significantly now towards those all-time highs not made too long ago, just last week. And so now the real question stands is whether price can now break above this previous all-time high, this recent high actually, and continue higher, or in fact, are we seeing a change in the trend here, and now are we ready to roll over and continue to the downside? So I think that's a very important one to note there, and something that you should definitely keep your eyes on in regards to US indices and the US 30 in particular. Next to talk about though is the dollar, where price, there not much can be really said here. Price is just consolidating, not much is happening. We are getting the US GDP growth rate figure today, so maybe that'll push the dollar one way or another. But once again, we're not seeing too much happen. Price is kind of consolidating at this top level of liquidity, and we're not seeing much direction either to the upside or the downside even. So it is quite hard to then make a judgment on price is ready to roll over, or price is now just preparing to move to the upside. So definitely keep your eyes on the dollar, and definitely try and look out for any moves to the future for where the dollar can now go, and obviously listen out for that US GDP growth rate figure that we are getting today, as I do think that is a kind of key piece of data that we'll see today that might push the dollar the one way or the other. The next kind of asset to talk about, the next currency to talk about, is of course euro dollar, which did interact with this key liquidity zone on Monday this week, and we did note that as a key area which was going to act as a strong area of liquidity to the upside, and that is what we have seen. We have seen price now move to the upside. That said, price has recently just come into contact with this key Fibonacci retracement level of 38.20, and also coming into contact with this key liquidity zone which lined up with that, which we did note as an area which was going to offer a great deal of bearish kind of resistance. So that was something that we did note before, and we have kind of seen that play out now. The thing is though that we have to note here is, as prices interacted with that and sold off from that level, ultimately price hasn't then just continued to roll off to the downside and break below this key liquidity level, and in fact price is moving quite slow. So possibly price will just stay within this range, will not break below this liquidity level, and maybe even then start to move once again to the upside. So definitely keep your eyes on Euro USD. It's definitely an interesting time to kind of be looking at the charts, and whether price can now break below this liquidity level or continue back to the upside is the real question of it will be the real confirmation of whether price is now going to continue to the downside or continue to the upside, as I think, in my opinion, these are the two levels now which matter to kind of decide where price will go. Next to talk about though is pound yen. Not much can be said for pound yen. It's kind of ranging around, consolidating, not much is happening, and which is quite surprising, to be honest, since price did interact with this 50% in a way which we kind of assumed then that price would continue to the upside. But in fact, price has kind of stopped at this previous area of liquidity and resistance, and now price is just hanging around that area, not much is happening. Next to talk about though is Bitcoin, which is making very interesting moves and has now come back down and retraced to this area of liquidity that we noted in yesterday's market briefing the day before as an area which we were expecting price to break above and then gravitate back to if we were expecting price to continue to the upside. That said, whilst you could form that bullish picture, ultimately price did interact with this 78.60 Fibonacci retracement level in a very bearish manner and did sell off from that area. So the question is now whether if price then starts to move back away from this area of liquidity, we've got a bullish signal almost, whereas if price then breaks below this area of liquidity, we've definitely then got to change our perspective on where price could be moving, and definitely kind of think about where price may stop on the downside. Now next to talk about is gold. Not much to say for gold really. Price is still kind of moving slowly to the upside, but the way the charts have kind of formed ever since we had this flag is kind of hard. It makes it very hard to kind of tell where price is really moving. Lastly to talk about on the charts, of course, is oil. Which of course not much is happening to do with it. Price is currently within this kind of area of liquidity that we noted previously. We've kind of got this counter trend forming, somewhat of a kind of flag that we can see here. but ultimately, not much is happening on oil. But once again, the kind of geopolitics within the Middle East and the news in regards to OPEC Plus is, of course, affecting oil greatly at the moment. That's all to talk about in the charts, though. Lastly, to talk about, of course, is the economic calendar, where, as I previously mentioned already in this briefing, we are getting some key data today, so make sure to listen out for that. Firstly, we're getting the Aussie consumer inflation expectations, followed by the German retail sales data figures, followed by that the German unemployment rate figure, and then we are getting also the British GDP growth rate figure, so a very important British figure there. Followed by that, we're getting the Italian business and consumer confidence figure, followed by the Canadian GDP figure, and then the US GDP growth rate figure. So, both US and British GDP figures to listen out for today. As well as that, we're getting the US consumer sentiment figure, followed by the Japanese unemployment rate figures and industrial production rate figures, and finally the Japanese retail sales data. So, we've covered lots in the articles, lots in the charts, and lots on the economic calendar. That's all from us at Wildwood Capital. Hope you have a great trading day. But once again, that's all from us. See you later. Bye.